Hi, everyone. I'm Rashid Gaissin. I'm a partner and head of legal practice at KPMG, Kazakhstan and Central Asia. Today, we have, I think, quite an interesting topic. And Kazakh oil and gas is obviously well known to the world market, globally, regionally, etc., for a long time, long enough, going back to Soviet time. But I think last few months, if you like, there was kind of a roller coaster for Kazakh oil and gas, for oil price, for generating income to the state budget, etc., etc. I think, and we with our colleagues and friends decided that we would like to do a joint event. We would like to invite people from different professions, and not just legal, as we always do for our legal events, but someone with a slightly different perspective and different background. And we managed to find 4 speakers today. And our first speaker will be Ashley Sherman, Principal Research Analyst at Wood Mackenzie. And his topic will be Kazakhstan upstream oil and gas in the 2020s, navigating challenging times. After that, we will have Natalia Perova, Nerush, and Yernur Toizhanov as our speakers, and I'll introduce each one of them in due course. So Ashley, over to you. Thank you very much for agreeing to speak to us today. Thank you.
No, thank you so much, and it's my pleasure to join the event today, and hope all the attendees are doing well. So very briefly, for those who don't know, Wood Mackenzie is an independent energy research and consultancy firm. So my colleagues and I spend our time analyzing the outlook for the entire global energy value chain. What I want to do over the next 10 minutes or so is contextualize how Kazakhstan's oil and gas fits into the global energy sector of the 2020s, really focusing as much as possible on what the future holds. What are the main challenges Kazakhstan's upstream oil and gas is facing now and will continue to face? As Rashid mentioned, we're all aware of the turbulent events of 2020 and the magnitude of the impact on national economies and the oil and gas sector, both near-term price pressure, but also long-term market uncertainty from the energy transition and demand risks. First, I want to give you a snapshot of the global outlook. Let's think about Wood Mackenzie's investment outlook. Capital expenditure on oil and gas development projects. Our view of 2020, the chart on the left, is 30% lower than it was at the start of the year pre-crash. Actually, our view of the next 6 years is more than $500 billion with a T US dollars lower than it was before the crash. And what's been pretty clear to us as we speak to all oil and gas operators around the world and governments is that no region, no company, no resource theme has escaped this crisis of 2020. And very little investment is now considered too sacred to be cut. That's the context in which companies are investing or considering investing in oil and gas projects. And that matters for places like Kazakhstan, where new major capital projects were already challenged. If we think about the headlines of 2019, cost overruns at Tengiz Chevron expansion and the relinquishment of the offshore Kalamkas-Moya Khazar fields, these were negative events that came before the unprecedented downturn of 2020. Now, our CapEx outlook is obviously directly related to the pace at which the industry is approving new projects. And what you see on the right here is our year-by-year view of the number of major upstream projects set to take a final investment decision, an FID. This is a great metric to show the sector's mood and its ability to access capital. And it's no surprise that when the price falls, there's also a big drop in the number of FIDs. In 2020, we only expect around 10 major upstream projects to be approved. And this picture is never only just about company strategies. It's also about what hydrocarbon-dependent governments are doing to support the sector. Kazakhstan made positive reforms after the previous crash, And we've seen countries like Norway already take steps in 2020 to secure investment and the economic multipliers that brings. So what about Kazakhstan in that context? What I'm hoping to show is that the Kazakh oil and gas production outlook is actually pretty strong if viewed at the top level. But the Kazakh oil and gas investment outlook is the real urgent concern in our view. You can see here our production outlook for liquids and gas sales. The gas here, that's only gas that is marketed. And this all accounts for compliance with OPEC plus oil cuts at the moment. The profile is strong in the 2020s because of projects that are already producing or under construction. So if all goes to plan, Tengiz-Chevron expansion is set to launch by 2023. Kashagan's initial phase can produce at plateau, Karachaganak too. But beneath that story, there are fundamental issues, not least the dominance of those three supergiant mega projects. Our base case doesn't include any large-scale new sources of supply beyond phases at those mega projects. That's what is captured in contingent resources. So the resources are there, but just not the commercial environment to justify their development. Also, there's a gas conundrum. Raw gas production is going to increase substantially, but that's not really reflected on the chart on the right. And that's because a lot of that new gas is going to be re-injected back into the subsurface. Gas is a key part of the energy future, and Kazakhstan wants it to be to boost gasification and to sign a long-term export deal with China. But we've been talking about Kazakh gas economics being a work in progress for almost a decade. So that needs to change so big operators don't just utilize gas, as they must, but maximize its commercial value too. Let's think now about the real heart of the challenge as we see it for Kazakhstan in the 2020s, the upstream investment outlook. We can see a clear shift in scale of upstream capital expenditure from $10 to $15 billion per year, potentially to $5 to $10 billion per year. In truth, that was always going to be the case. Tengiz-Chevron expansion spend, $45 billion in total now, is post-peak, and so has dominated recent capex. But there isn't a giant project like that imminent on the horizon. Honestly, there's not many projects like that expected anywhere in the global sector, apart from big liquefied natural gas developments. For more than a decade, the Kazakh sector has been propped up by these giant investment phases. That's been taken a bit for granted, but that's not what the future holds. And that really matters so much for employment and for the local service companies too. Even an optimistic scenario is going to involve a sequence of much smaller projects. That's what international oil and gas companies have in mind. But almost all of the investment beyond 2025 here is not yet approved. And that includes Kashagan Phase 2, which itself has been broken down into sub-phases for evaluation, hopefully more manageable commercially and technically. While focusing on future investment, I also don't want to forget about the state of play for current producers. That's a point that can be fairly raised, I think, in Kazakhstan recently. For example, the 2018 tax code introduced the more attractive alternative subsoil tax terms, but largely applicable to future discoveries offshore or in deep reservoirs onshore. The immediate impact on the current production base wasn't that significant. And it's those producers that have suffered so much pain earlier in 2020. This analysis here shows short-run marginal costs, basically the price required for an operator to remain profitable this year, excluding capital expenditure. Most Kazakh production actually remains profitable below $30 per barrel, which sounds great, but it's a bit misleading because production is so dominated by the three mega projects. So much of the rest of the production mix is actually marginal below $40 per barrel, either because of high operating costs at mature fields or pressure to supply oil domestically for a very discounted price. Some of these projects will only break even in 2020 thanks to tax breaks, mineral extraction tax breaks. That's why the tax breaks are available for marginal fields, of course, but it's part of a balance or dilemma for the Kazakh government. It's probably a cliche, but the Kazakh government needs to manage the share of the pie between investor and itself, but also needs to make sure the pie keeps growing, and that's far from assured. Let me end by looking at those same points just from a different angle. On the left here, you can see a benchmarking of oil and gas production indexed to the 2000 level. And that really shows you that Kazakhstan's production trajectory has few peers over the last 20 years and also over the decade to come. But I actually looked back to our forecast from 2010, what we thought Kazakh oil and gas production would be this year in 2020. Back then, we estimated 3 million barrels per day. In reality, it would have been 2 million barrels per day without OPEC plus cuts. So it's clear that Kazakhstan hasn't maximized the potential yet of its discovered resources, to say nothing of the immense remaining exploration potential. On the right, we see the competitiveness of new major capital projects, thinking about the break-even price as the metric on the y-axis. It's clear here that Kazakh projects, almost all new phases of the mega projects, have higher break-even prices than the global average. Kalamkas-Moya Khazar, for example, would need a long-term price of more than $60 per barrel to break even, unless costs come down significantly. And we're screening projects now using a long-term price assumption of $50 per barrel flat in real terms. In some countries, it's the post-tax economics that are the only real issue. That's to say, tax terms. In Kazakhstan, that's true, but it's not just that. Pre-tax economics, are a struggle too. So costs, yet again, must be at the forefront of operators' minds. How do they do projects differently in the specific context of Kazakhstan? To conclude there, I'll just add that there are some notable signposts to watch over the next 18-24 months, from a relaunch of Kazakhstan's onshore licensing auctions, now all online, to development progress at major projects. These would be vital milestones, and if delivered successfully, could change how international investors view Kazakh oil and gas for the better, no matter the challenging times. Thanks again, and I look forward to the Q&A discussion at the end. With that, I'll hand back to Rashid and the other speakers. Thank you.
Actually, many thanks. That was very, very good overview. I know you have a very lengthy and comprehensive presentation, but thank you very much to give us such a concise summary. I'm sure those of us who are really interested in the topic will dig out and dive into your presentation. We reviewed properly. Our next speaker is Anna Nerush. Anna at Haynes and Boone, global US law firm, and Anna's topic today is structuring, exploration, production, investment, and developing projects with a future disposition in mind. So Anna is a very distinguished practitioner, so I hand over to you, Anna, please.
Thank you very much, Rashid, and good afternoon to everyone, and good morning to those joining from London. It's my pleasure to speak to you all today, and thank you, Rashid, for the introduction. I'm very privileged to have worked on a number of projects in Kazakhstan, including Kashagan and Karachaganak. And following on from Ashley's presentation, the focus of my topic would be on investments in the E&P sector. And as Ashley identified, there is a focus on what those investments may look like going forward, and how this should be structured with an international oil and gas company in mind. So just a quick overview of what the overall legal framework for upstream projects looks, and this is not just specific to Kazakhstan, it generally applies to oil and gas sector internationally. And one would have the host country constitution and laws and regulations, which would have an overarching impact on the project and the legal framework, and that's something that Yernur will cover in a little bit more detail later on. And then, of course, you would have an instrument between the host government and the oil and gas company, which will grant the rights to hydrocarbons, and that's usually done by way of production sharing contract or subsoil use contract or a license, depending on jurisdiction. And then there will be a shareholders or an joint operating agreement between the participants, which will set out and regulate the governance of the projects as between the participants. This is a structure, as I said, which applies to however a particular investment is structured, but most commonly the investment is implemented through either unincorporated joint venture or incorporated joint venture. In Kazakhstan, I should note, it is generally has been a practice, and I believe it is still the case, that the oil and gas companies are required to incorporate a local entity, so the investments are usually implemented by way of an incorporated joint venture. So I will largely focus on that structure going forward, but just by way of a brief explanation, the difference is that in unincorporated joint venture, each participant will enter into the subsoil use contract on their own behalf, and the relationship will be governed by an umbrella joint operating agreement, so without there being an incorporated separate legal entity. Whereas in case of an incorporated joint venture, it's similar to a joint venture or a legal entity that one would see in any other sector, whereby a legal entity is incorporated and each partner invests and holds its interest by way of a shareholding. Whether you are investing by means of an incorporated or incorporated joint venture, there are a number of important considerations that should be bear in mind at the very beginning, and that's something that I'm sure will be picked up by Natalia later on in her presentation, but it's very important to structure your investment right. There isn't a simple formula that fits all, but there are certain considerations that would apply to every investor looking to invest in Kazakhstan. And certainly some of the considerations will be specific to the type of the investor, what their corporate structure looks like, where they're invested, and also how to optimize their investments. An important consideration will be bilateral investment treaties, and Kazakhstan is a party to 47 bilateral investment treaties, of which 44 are in force. And what the effect of the treaty is that it gives the investor certain protections, and given that the E&P sector is highly speculative and has quite high capex and opex requirements, these are very helpful provisions to consider when structuring your investment, to make sure that there is a BIT between Kazakhstan and the state in which the investment vehicle is registered, so that you can take full benefit of those protections. There are also multilateral investment treaties, such as the Energy Charter, which apply to the industry overall, New York Convention, which applies to enforcement of arbitration awards, which are clearly provide important investor protections, and Kazakhstan is a member and a signatory to those treaties. Therefore, that should provide some security to the investors. It's also important to consider taxation treaties. Clearly, when you're looking to invest, it is about optimizing your investment, but also monetizing that resource and the ability to extract and to move profits freely and in the most optimal structure once the project is monetized. And local procurement laws, this will have an impact on what emphasis must be given to local suppliers and also local local requirements. Just by way of an overview of the differences between an unincorporated and incorporated joint venture, and I've covered this already briefly, so I won't focus on this in great detail at the moment, but clearly when you're looking to invest in the project, and this is something whether it's already an existing project or whether it's by way of a new licensing round, one would be conducting due diligence into the vehicle that holds the production sharing contract and the rights to the hydrocarbons. Again, as I mentioned, in Kazakhstan, the general structure is through an incorporated joint venture. Just, I thought, a helpful overview of what the investment would look like. This is in the case of an unincorporated joint venture, so where you would have a joint operating agreement. And as you see here, each investor invests by itself directly into the operations by means of a joint operating agreement. Whereas what we commonly have in Kazakhstan is you would have a joint operating company, which would be an incorporated entity, and each investor would invest into that by way of capital contribution and will hold shares, and the operations would be governed through a shareholders operating agreement, which is similar to a JOA. It's really a hybrid between what one would see in a traditional shareholders agreement with elements of operational regulation. So let's say take a situation where an investor is looking to invest in the project in Kazakhstan, and again, whether it's a new license, so you enter into negotiations with the government for a subsoil use agreement or a PSC, or whether it's an existing project that you are farming into or entering into through an SPA, there are some important considerations to bear in mind. Firstly, joint ventures do not last forever. Partners may exit. So what works for the current partners and the comforts that you may have in the existing partnership may change with the dynamic of new entrants. And overly tailored or complex contractual arrangements are not always good. And what I mean by that is that it makes your asset less marketable if the legal and contractual framework looks overly complicated or unusual. So when you're looking to invest in the project, as I mentioned, you would be carrying out due diligence, and I don't intend to focus on that, as we're all familiar with what that looks like, and that would be legal, technical, and financial. But when you're looking at a project that you're developing and you're putting together a documentary package, there are some things that need to be considered, and those generally relate to marketability of the project, the transfer restrictions, so that will actually allow you to dispose or divest your interest, the security and confidentiality. And this would apply whether you are adhering to existing JOA or shareholders and operating agreement, or indeed whether if you are farming into an interest, whether you should be renegotiating the existing package to enable you to implement an exit further down the line. So on the subject of marketability, and as I mentioned, that's overly complicated provisions either in the shareholders agreement or in operating agreement that you may have, they will have an impact on how marketable and how attractive your assets is to a potential buyer. And there are we've seen some examples of where companies and partners overcomplicate particular scenarios, but also where they tailor the provisions or the conditions of the company and its governance to specific partners in place, and which makes it less marketable and less interesting to potential buyers. So here I've given an example. whereby a company has a fairly wide remit to pursue growth and expansions, even in absence of an approved budget, which will of course put a financing burden on the shareholders, whether by way of cash calls or further contributions. This may be something that's attractive and agreeable to the existing partnership group, but clearly would be quite an open-ended burden for a potential buyer. We also see creditworthiness and security provisions as those given some concern. As you will be aware, whether it's government security or corporate security, there will be some credit rating that is attached to it. And exceptionally high credit rating may, of course, give comfort to the existing partners, but that may limit your pool of potential buyers. So there may still be credible entities, but they will just simply not have your AAA, for example, A+ rating. It's also common, and this is something that we see for example, in the UK North Sea, and also in Norway, where you have complicated offshore infrastructures, that where the participant would own an interest in an upstream project, they will also hold an interest in either an unrelated field, but one that uses similar infrastructure, or indeed to the, let's say, pipeline network. And often partners would tie those projects together. So if one is to divest an interest in the upstream project, it has an obligation to tag its interest in the remaining infrastructure. That's sometimes complicated, and complications being that, again, it limits your pool of buyers, because you'll have to find a buyer who's interested in taking the full lot. And also sometimes the seller may not want to divest in everything at once. And as I mentioned, deviating significantly for standard industry forms raises its own issues. We currently see the APN model, GOA and farming agreements as those most commonly used. Obviously, these documents need to be tailored to the specifics of the transaction, but it gives comfort when you're looking to enter into an asset or to dispose of it, where there's a familiar form and familiar terms. There's also restrictions on transfer, which one needs to consider when entering into an asset, or again when you're negotiating a fresh shareholders and operating agreement. And that clearly there has to be some restrictions and qualifications as to the transfer and the ability of your partners to transfer their interests. But my advice would be not to overcomplicate them. And whilst, of course, as a participant, you would also want to have a right of consent or refusal when your partners exit the joint venture, but overcomplicating this by, for example, certain conditions and which your partner can refuse or accept a potential buyer can cause problems down the line. Usually you would see that those are limited to technical and financial capabilities. And these are usually the most common grounds and the most sensible ones, but I wouldn't suggest overcomplicating it beyond that. I've already mentioned security. Obviously, every joint venture and every partner would want to be able to encumber its interest, and generally there will be some restrictions, some provisions in the shareholders' agreement as to how this can be done and to what extent. But again, one must bear in mind when dealing with security obligations is whether, oops, sorry, I don't know what happened there. How does that impact your ability to transfer that interest further down the line, and whether that security will be released upon exit and taken on by the new buyer. Sorry, I seem to have lost my slides. Don't know what happened there. Anyway, thank you. an important point to note as well that in an incorporated entity, obviously the ability of each shareholder to encumber its interest may also impact the company's ability to borrow and its gearing. And one of the last points that I wanted to mention is confidentiality, and that's something that's quite frequently overlooked, perhaps because it's not the most commercial point in the negotiations. But overly restrictive confidentiality provisions, which are very prescriptive and very limited as to whom information about the company can be disclosed, will also limit the company's ability to attract financiers and buyers. So it's always worth considering these in negotiations. And as I said, whether you're negotiating a standalone document or looking into an existing project, it's good to have the freedom and the ability to conduct yourself with a potential buyer further down the line to enable you to enter into negotiations and to divest your asset. That's all from me. I'll be happy to take any questions later on. Thank you. Rashid, I will hand over to you for the next question. Thanks.
Yeah, no problem. Yeah, I think it was very comprehensive, and I think it's one thing to enter the business, but I think your presentation was very, very well tailored, that it's all about how you can exit the projects successfully and with some good profit. Otherwise, it's not worth to look into any investment in the first place. So I'm very grateful that you covered this topic, and I'm sure we will have some further questions with regards to your presentation. So we move to our next speaker, and we'll have questions and answers at the end of the webinar. Our next speaker is Yernur Toizhanov. He's a manager in our legal team at KPMG, and his topic is regulation of oil and gas M&A transactions and auctions in Kazakhstan. And I think this question already been asked by someone in the audience, so hopefully it will be good enough, or if not, we will just dig into this topic again in Q&A. So Yernur, over to you, please. Thank you.
Rashid, thank you. Dear participants, I'm very pleased to provide a presentation on regulation of oil and gas. And as Anna has already presented and discussed the issues of joint operating agreements and upstream production, I would merely focus on local regulatory aspects and auctions and some of the type of agreements under which the oil and gas activities are done here in Kazakhstan. So Ashley has already touched upon some of the microeconomical aspects of Kazakhstan. So Kazakhstan is a country with the globally 12th in the world in terms of proven oil reserves, and there were three major biggest oil and gas projects, which are Tengiz, Karachaganak, and Kashagan, which form predominantly the more than half of the budget of Kazakhstan here. So the amount of investments into the industry back in 2019 was around $1.8 billion US, which consisted of about 77.8% of total volume of direct investments in Kazakhstan. So Anna has also told about the protection treaties and protection mechanisms of foreign investments, and I just would like to highlight the investor countries in oil and gas industry, which are the Netherlands, USA, Switzerland, Russia, Belgium, and China. So here in Kazakhstan, we operate under various legal transactional documents, which are shareholders agreements, sales and purchase agreements, and joint venture agreements. And companies which operate in the industry are limited liability partnerships, or sometimes we call them limited liability companies, joint stock companies, and in rare occasions, branches. And there are also joint ventures consortiums which do not form a legal entity. So the parties to an agreement may choose the governing law of the agreement as a whole, or for its certain parts, foreign governing law, but there's only one requirement: there should be a foreign element to this agreement. Yeah, so shareholders agreements, we don't have a direct alternative to the shareholders agreements. For instance, under English law, we do have a foundation agreement, which is not a direct alternative to it, but it may include some of the tools and principles of English law to be implemented into it, such as lockup provisions, waiver of preemptive rights, tag along and drag along rights. We can also include call and put options and pull options, and mechanisms of resolving deadlock situations, as well as other issues. But we also tell our clients and companies that enforceability of such provisions and such instruments under Kazakh law might be questionable, because our local courts, as these provisions are not directly envisioned in our local legislation, and our local courts might interpret it differently. And also there has been no well-established practice in terms of these provisions provided by local courts. So sale and purchase agreements, these are kind of tricky, because we have a mandatory provision in the civil code which directly provides that the transfer of shares of a company which is established and registered in Kazakhstan should be governed by Kazakh law. But there is an option which we can implement a foreign law into the transaction, for instance, English law. So we advise our clients to conclude two SPAs. The one which is a transactional SPA would be governed by Kazakh law, and the other document can be governed by foreign law, for instance, English law, which would provide all the mechanisms, reps and warranties, and other clauses which would protect both the buyer and the seller. And such structure is in practice here in Kazakhstan and is widely used by the industry. We have an alternative of joint venture agreements, but it's not a direct joint venture as it stipulated by the English law. So it's typically an agreement to create a consortium, and it does not create a legal entity. So what we mostly advise is that in bigger volume projects, we advise to create as Anna told, an SPV in a certain jurisdiction where there would be local Kazakh shareholders and a foreign investor. And on that level, you would have a SHA, which would regulate all the rights and obligations between the partners. And then these SPV would enter into Kazakhstan and operate in oil and gas industry. In terms of local regulations, we do have two regulatory aspects. The first one is the consent of the competent authority, and the competent authority in oil and gas industry in hydrocarbons is Ministry of Energy. And the second aspect applies only to strategic deposits, which I think in terms of hydrocarbons, there are about 95 strategic deposits, and they are approved by the government. Most of them are offshore, well, definitely offshore projects, and the others are quite big fields with the bigger volume reserves which are approved. So obtaining a consent, the application to obtain the consent should be done by the purchaser, by the buyer. And it takes about 1.5 months to get this consent. In terms of waiver for preemption right, it takes about 3 months to get it. So there are certain exemptions in terms of obtaining consent. If there is a legal succession or reorganization within the company, within the group of companies, so there's no need to obtain such consent. And if there is a legal succession in which 99% of shares or interest would belong directly and indirectly to the same entity. And there's also an exemption if the company's shares are already listed on organized securities market and are open for trading to public. In terms of security, the subsoil use contract can be pledged, and you'll have to obtain a consent and then register the pledge agreement. And in terms of enforceability, such pledge in terms of event of default, in case of event default, is carried out through a public auction. Carry financing is a special tool which our national company Kazakh Oil&Gas has been using quite for a long time. Yeah, so there were the principle of the carry financing. It's just provides for a local company not to invest too much money into exploration or production, mostly exploration activities, and they invite other global international oil and gas companies and conclude this carry financing agreement, which on the one hand would provide that the international company would invest into exploration activities, and if there's and if the deposit is found, and all these investments should be transferred and then refunded at the stage of production. So Kazakh Oil&Gas KMG has already entered in several projects with various companies such as Lukoil, Eni, Gazprom, and Rosneft. And auctions. Considering the pandemic and the coronavirus COVID-19 effect, it was decided that all of the auctions would be online via a special web platform, trading platform, and these auctions are held not more than twice a year. So if the company is interested into taking part in such auction, it should submit an application to initiate an auction to the Ministry of Energy. The Ministry of Energy should consider it and within 20 business days should respond. And upon consideration of the application, the state authority publishes a notice on holding an auction or refuses to consider the application. Step 2 would be publication, which is I already mentioned. Step 3 is applying for participation. The applicant pays auction participation fee, which is not more than US $800 US. So it provides the participation fee and then submits the application, and within 2 months from the date of publication of the notice of the auction should take place. The state authority informs the applicants admitted to participate in the auction and at least 10 business days prior to the auction. So the auction is conducted in an electronic form on the website of the operator. The method of the auction is a English auction, and the commission for granting the right determines the winner of the auction, and the winner would be the bidder who has offered the largest signature bonus. The auction results are then announced on the day of the auction within 3 business days, and the winner transfers the signature bonus and provides payment confirmation to the competent authority, to the state authority, within 20 business days from the date of auction. And within 20 business days after that, the subsoil use contract should be executed. So there's an online platform. I've seen the question. There's an online platform and interactive map. And I think last time when I visited this website, there were 88 fields where the companies can apply and take part in the auction. So the online platform provides the some standard information on the field, and then it is possible to apply and get some more information on specific field if you are interested. Yeah, and I guess that's it. If you have any questions, I would be pleased to address them in the Q&A session. Thank you.
Yernur, thank you. Thank you very much. I think we had a very good overview from you, and I think we'll definitely have some questions and probably follow-up discussion offline. Our next speaker is Natalia Perova, a barrister at Lamb Chambers in London, and the topic of her presentation is resolving oil and gas disputes in challenging times, issues, opportunities, and possible solutions. And I want to note that Natalia is one of the very, very few Russian-speaking barristers based in UK but working globally. Natalia, over to you.
Thank you very much, Rashid. Hello, everyone. And as Rashid mentioned, I'm going to talk about resolving disputes in challenging times, which we all know about, and we obviously heard from previous speakers and from Ashley about how challenging they are for this industry. So from the start, what we need to think about is what are potential issues that are caused or could be caused by the challenging times that we live in. And I decided to effectively locate them into several categories. Firstly, it's obviously the challenging times create the uncertainty, and as you can see on the slide, and we had a discussion about deals potentially falling out or deals being delayed, etc. So that causes dispute. Secondly, in relation to some companies start thinking about optimizing or making more efficient the contracts. So you might have some disputes which hasn't arose yet, but could be there because of trying to get away from or terminating the contracts or revision of the contracts. So that obviously creates a difference or dispute between the parties. Then we all know about the consequences of lockdown and border restrictions and non-deliveries and all sorts of things related to that. And we obviously have heard multiple occasions about force majeure, frustration of contracts, etc. So that's one of the major things. But also economic and market factors are here as well, which are linking obviously other disputes, but also increasing debt potentially and cash flow issues. And once you get to the stage of actually dispute resolution, and if you have, let's say, dispute resolution in courts, there may be some issues related to that, including closure of courts, case backlog, and remote hearings. So all these obviously arise slightly later at the stage, but it's something to obviously bear in mind when you consider whether you need to escalate your dispute to the next stage. And it's something that I'm going to talk about in terms of how to make it or try to make it at least in the most efficient and cost-effective way, because the last thing you want is obviously start ruining the long-term relationship with the other side, and also starting to spend a lot of time and money on lawyers trying to resolve a relatively small difference. So what are the options and what are the opportunities? And when you consider that, you need to start from the contract itself. So from the wording of the contract, you might be already stuck to what is written there in terms of the dispute resolution clauses and applicable law. But there are other options where you can effectively, despite the contract, you can actually try to negotiate or agree something different. So applicable law of the contracts is one thing that you are looking at straight away. And as we discussed, as Yernur mentioned, that it's also something that needs to be considered from the start, because obviously there are mandatory provisions applicable in certain laws and jurisdictions, and therefore you might have some contracts or clauses being unenforceable because of the applicable law, and how they're interpreted will be also governed by the law applied to that particular contract. And then you obviously look at dispute resolution clause itself. Sometimes it's combined, or sometimes it's different from the applicable law clause. So what you look at is which contracts. You might have the dispute involving several contracts, and then you might have competing dispute resolution clauses. So you always have to look at which contracts govern the dispute, and also which disputes, which dispute resolution clauses applicable there, and whether they are conflicting. Then you need to have a look at obviously whether it's governed by arbitration clause or whether it refers to courts for litigation. And something that hopefully was considered by contract drafters from the start, but it's something for if we have here contract drafters, for you to bear in mind before even any dispute is contemplated, is whether you consider going to, let's say, national courts, which may not be in this particular industry the best way to resolve disputes. or actually go into arbitration, which is more common, but it obviously has its problems. One of the issues is a multiplicity of contracts and parties, the one that I mentioned, which is common to this industry. And therefore, if you, for example, don't apply arbitration clause to one of the other contracts, or it doesn't apply to a particular party, then you might be effectively stuck unless they give consent to go to arbitration, because arbitration itself is actually requires a prior agreement or to arbitrate, or even post-agreement, but you still need to bear in mind that some party might be disruptive later on and not agreeing to that, and then you'll have multiple decisions, and try to reconcile it will be a bit of an issue. So that's something to consider. Now, if you have litigation, you obviously need to see which country, because you can't generalize all the countries and laws we have, and that determines a lot of things, including dispute and cost litigation, and including how the courts approach and how neutral they are, and how to the parties. So there's something obviously bear in mind. Arbitration is more neutral and more international in nature, and therefore something something to consider as well. But think about not just whether to choose arbitration, but also which institution, if you choose institutional arbitration, and if you don't choose, then whether you can actually apply ad hoc arbitration clause, and whether it's appropriate in the circumstances, because obviously you won't have the institution which pushes effectively further that, as opposed to you get stuck with parties not agreeing on something and you didn't specify that originally in the dispute resolution clause. I do mention here on this slide AFC Court and International Arbitration Center, which is, as we know, established in Kazakhstan for you to consider. We had as part of one of the events that British-Kazakh Law Association held back in September. We had a very good webinar on AFC Court and Arbitration Center, so I would refer you to there. So it's another thing to consider if you are coming from Kazakhstan, obviously, or dealing with Kazakh party, because it brings a bit more international dimension to it. So it might be more advantageous for you to consider that. And another thing that I wanted to talk about, which is quite important, is ADR process, alternative dispute resolution process, and potentially included in multi-tiered or escalation clauses. So the next slide I'm going to mention is about that. So obviously, very experienced contract drafters, we already have considered that. But if you haven't, something to consider from the start, ideally. So whether you would include some sort of escalation clause where you will have negotiations, so escalating to the dispute to litigation or arbitration. Alternatively, mediation, where the parties will attempt to settle the case before it actually escalates further. And the reason for it, one of the reasons for it, would be to effectively save costs, and also because the parties themselves can agree much better deal, much better solution to the problem they have got, rather than an arbitrator or a judge would impose that decision on them, which may not effectively suit anyone, and also which may effectively break the relationship between the parties, it's better to find a mutually acceptable solution where everyone effectively becomes happier, rather than one party is extraordinarily unhappy and the other one is more or less happy. So, but what is good about pre-agreed multi-tiered clauses is the fact that you will effectively force, in a way, contractually force both sides to consider settling the case before actually proceeding to arbitration or litigation. And the reason for it is you might find that once the dispute arises, and most dispute resolution lawyers, being myself a dispute resolution lawyer, then it very quickly escalates further and further, and then you find yourself already spending much more money and time before the dispute is settled. A better way would be considering settlement before it actually escalates further. So multi-tiered clauses will allow you to consider that, or at least make the other side to consider that and attempt a settlement. You can also interestingly, if you don't have an arbitration agreement at the beginning, but you feel like that would be the appropriate one, if the other side agrees, you can refer, or you can conclude post-dispute arbitration agreement, which allows you to refer to arbitrator a dispute in a way that would be the best one for that particular dispute. And it might be that you have a much more simplified procedure, as opposed to what you have agreed originally with, let's say, 3 arbitrators and such, which is more complicated, or referring to court. So it kind of gives you another option to bear in mind how to settle a particular dispute. The most important thing is to consider that dispute and actually see what are the ways that are allowed. When I say that, you also need to think about what law is going to govern it, because not every dispute resolution clause will be acceptable, and will be acceptable in one jurisdiction or the other. English law, for example, is more flexible and more giving the opportunity for the parties to agree. Freedom of contract is very important in English law. It may not be applicable to other laws. So again, governing law of the agreement, arbitration agreement, is also important. And in English courts, for example, ADR is encouraged by courts, and it does look like in many jurisdictions that's the case. So it is important to consider it anyway to save costs and to achieve a satisfactory result for the parties, but also to maintain a business relationship with the other side, because you might be still in the relationship which is highly important to you. So some ADR processes like mediation or med-up, where you can't agree on something, it goes to arbitration, or sometimes med-up where you effectively you started arbitration, but then you kind of come back to mediation is also possible. So there are ways to kind of think about it, and the ways to resolve disputes, but think more creatively, speak to lawyers whether it's possible and enforceable, and it's something that to bear in mind, rather than just straightforward, okay, dispute resolution lawyers go to court. No, there are a lot of more mechanisms that you can employ to maintain that relationship, to resolve your disputes, to get what you want, but in the most effective way. So just possible solutions, as I mentioned, multi-tiered clauses in the contracts to consider from start. They require to quite often attempt ADR. Think about how to draft them, which is also important, because they can't be very stringent. Otherwise, something just falls apart, and then you have an enforceable or impossible clause, which will effectively be unenforceable. And at the same time, don't make it too broad or too vague, because in some jurisdictions, for example, if you don't provide sufficient certainty to contract, again, it may not be enforceable. So think about the sufficient detail, but don't make it too stringent, and have always a fallback basis. For example, if you can't agree mediate or something like this, something to bear in mind. So it should contain basic details and fallback basis. If there is no ADR process in the contract, it's not the end of the matter. You can still attempt ADR. Make suggestions to the other side. There may be a way of negotiating or mediating the case without escalation clause. It just prompts, let's say, to consider it, but still you can make your own effort to do that. And also, in the current climate, and you might have heard about online dispute resolution through arbitration, mediation. Even courts now use remote hearings. So consider online dispute resolution to save costs and avoid travel restrictions for all witnesses or lawyers involved. It can also be done online, and parties can agree. So, and in fact, in the challenging times, it might be even imposed on you, but it's better to consider it and agree on it, because that might save you quite a lot of cost of coming all together in one particular place at one particular time, where obviously coronavirus restrictions may not allow you to do that. So in the conclusion, the dispute resolution clause should provide clear, ambiguous framework, include alternative dispute resolution mechanism in it, ideally provide for resolving disputes in an efficient and effective way, and must be enforceable in the place where the assets are. Think always about the enforcement from the start before you start doing that, because otherwise you might find yourself getting a brilliant result but not being able to enforce it. Obviously, arbitration provides a better solution normally with New York Convention, but look into whether that particular party is New York Convention party, and then proceed accordingly. Thank you very much. That's my my presentation, and if you have any questions, please please ask. And I give a word now to Rashid. Thank you.
Natalia, thank you. Thank you very much. I think we had a very good and very practical overview of what can be done or what cannot be done, which I think is also very important. I suggest we go to our Q&A session now. We already have 3 questions and 1 question in the chat. So I ask all of you who want to ask questions, better use that section, the icon questions, not chat. So so we have 4 questions, so we'll try to get answers to all of them. So the first question is from Yermek Jumabayev to Ashley. I'll just read it out, and then Ashley probably go over to you. Ashley, do you anticipate in your scenarios that no more foreign direct investment will be taken by oil majors in Kazakhstan amid shift to gas and wind solar project as a response to ESG requirements?
No, thanks very much, Rashid, and thanks for the question, Yernur. You're exactly right that the strategies of the oil and gas majors are a key factor when we think about the future of big upstream investment projects in Kazakhstan, because Kazakhstan will continue to need their technical expertise for its most complex projects. And if you've read the recent strategy updates of BP and others, not that BP is currently an investor in Kazakhstan, but you can see that they don't align very well with the long timeframes and high cost of some future Kazakh opportunities. So to directly answer your question, our base case does account for several final investment decisions at brownfield phases, so additional phases at existing projects, but very, very few new projects, what are commonly called greenfield projects of large scale. And one thing I didn't mention, of course, is that there is potential for those exact same companies to invest in renewables in Kazakhstan. We've already seen that with Eni, Shell, and Total. And I'm sure Kazakhstan, the Kazakh ministry, the government will hope for more of the same. So international investment in renewables is a very positive trend to see too.
Fantastic. Thank you. Thank you very much. I think someone cynically will argue that some of these majors, they basically doing renewable projects just to please Kazakh government, just they are in line with current thinking and government sort of position, etc. But I think that's very cynical view. I think the reality is somewhere in between, that oil majors, they are genuinely interested, and hopefully they are doing something commercially sound for them as well when it comes to renewables in Kazakhstan. I think we have another question from Asil, England, and that's to Anna Nerush. Anna, I hope you're still with us, right? Anna? Yeah. So the question is about Ireland, which is, well, I guess distantly relevant to what we were discussing, but still, Ireland has recently announced that they would like to get out of oil and gas production with a view of shifting to carbon-free economy. And if you have clients operating in that jurisdiction who already hold existing licenses, do you anticipate to see any standard provisions in their agreements focusing on mitigation of risk associated with the change of regulatory regime? I think it's pretty decent for Kazakhstan right now, where Kazakhstan is still very much focused on oil and gas despite renewable projects. But I guess that could be relevant to countries like pointed out here, like Ireland. Yeah.
Yeah, I think that if I may rephrase that question and talking about putting more emphasis on the change in legislative framework, or perhaps some of changes that that may come in that may impact projects. Generally, in long-term projects such as whether there will be in renewables or oil and gas or infrastructure projects, you will have stabilization provisions that will protect that project from any adverse changes in fiscal or legislative environment. And those would be in your subsoil contract or some other government agreements. We certainly, and that would usually will be resolved in arbitration, because one would have to show that there was a material adverse effect leading from that change that has impacted the economic balance of the project. With respect to changes into more carbon neutral industries, we're certainly seeing that across the sector. There have been a number of jurisdictions, Norway, UK. I'm afraid I'm not an expert on sort of Irish developments, but we're certainly seeing a lot of former oil and gas assets offshore being used for offshore wind projects and for carbon capture, and I suspect that that will continue to grow. But there certainly has been a shift in investment and in focus on renewables and cleaner, more carbon neutral projects. But I think, as Ashley already alluded, that's either by existing oil and gas players, so by majors like Shell, for example, and Total, or whether it's by independent companies such as Vitol, for example. I hope that answers the question, but I'll be happy to take a follow-up question if not.
Thank you very much. I think the next question is from Simon Nutting, and it's about auction legislation. Can the auction legislation, I guess it's for Yernur and maybe Anna as well, can the auction legislation extend to routine sales entitlements of oil and gas at an agreed FOB for point on a monthly basis? So Yernur, over to you, and then maybe Anna as well.
Yeah, Rashid, thank you. So basically, upon the results of the auction, the company would enter into subsoil use contract with the state authority, and in most cases, these subsoil use contract contains a provision on mandatory sale of certain amount of hydrocarbons in the internal market. So this provision was introduced to fulfill the supply and demand here in Kazakhstan. But in most cases, if there is no need for fulfilling the internal market needs, the oil and gas company can export the hydrocarbons to any country on any Incoterms it would like, but it's not possible to put a certain clause into subsoil use contract stating that certain amount of hydrocarbons would be exported to certain vessel or a certain destination on FOB. It's not possible to put such clause into subsoil use contract.
Thank you. I think that.
Yeah, I would just.
Anna, please.
I was just. Yeah, no, I just wanted to add to that. It's, as he correctly noted, that any PSC or subsoil contract will have a DMO, so a domestic market obligation, where you go into production, you would have to agree a production plan and or field development and a production plan with the government, which will have specific requirements, and they may be changing as the contract goes on or as the project is developed as to how much of your gas or oil has to go to satisfy domestic market requirements. And then the contractor would be free to sell the rest of the allocation as it sees fit, whether on an aggregate basis for the entire joint venture, or which would be done by the operator, or whether, for example, each participant sells their own entitlement. But that's usually subject to a marketing agreement, or is regulated in a different standalone agreement rather than the subsoil contract.
Thank you. Yeah, we have a number of other questions. I'm not quite sure we have relevant speakers here, but if you don't mind, I will go for them, and then we'll probably decide. So one of these questions was from sorry, let me see. I'm losing them now. From Nurjan Kairbayev. So he had two questions. One was with regards to KMG IPO, and I guess that's probably for Ashley, about potential IPO or selling a stake to strategic investor like Aramco IPO, etc., divestment of midstream assets by ADNOC to bring the capital required to diversify and fund future projects. So I think that's for Ashley and maybe some other colleagues, whoever wants to join. And another question, Nurjan, I think I will probably take it offline, because obviously I think it's very, very specific technical question about international hydrocarbon reserves reporting, etc. So I'm not sure we have relevant experts in our panel today. So sorry about that. But Ashley, could you probably address this KMG issue with IPO, etc.?
Yeah, absolutely. I can also very briefly touch on that second question too. So, I mean, I think most people will be aware. I mean, there are plans for a KMG IPO, as part of broader privatization ambitions in Kazakhstan. But obviously, the timing of any IPO, particularly a national oil company IPO, depends on lots of factors, including market conditions, oil market conditions, equity market conditions. So, understandably, timelines, have been delayed, and there's differing perspectives on the plausibility of a KMG IPO, just as there were about a Saudi Aramco IPO. I think our perspective at Wood Mackenzie is, whether an IPO happens in the next few years or not, the journey towards that, the internal transformation that KMG is trying to pursue will be a net positive. But what we need to focus on in the next few years is whether an IPO happens and it ticks the box of a listing, or whether it's an IPO, I guess, as most people would want it to be, bringing in, strategic institutional investors from overseas. But there's still a lot of work to, I guess, optimize the corporate structure, including the now targeted unbundling of the midstream, so Kaztrans-Gas, Kaztrans-Oil. And on reserve classification, very briefly, that is still on the agenda, the gradual emphasis on gradual transition to SPE, PRMS classifications. At a country level, it's going to take more time, but what has been positive to see is Kazmunaygas itself start to report its annual reserve audits in alignment with SPE, PRMS classifications, which obviously is an important point with regard to the IPO2 talking the language of the international industry. So I'll leave it there.
Okay, thank you.
Rashid.
Yeah, I don't know whether anyone else wants to join and chip in, but I personally think KMG IPO probably, again, it's my personal kind of subjective view, could be better off a year ago or whenever it was supposed to be. There are obviously some good reasons why it didn't happen, but I think in the current environment, I think now it's officially postponed till 2021, so next year, I guess. But who knows what the situation will be with the energy market, oil price, etc., etc. So I guess timing is everything, and as some investment bankers say, it's like in opportunity, sort of window of opportunity is kind of quite narrow. And I would just probably point out to a very successful IPO from Kazakhstan in London this week from Kaspi, which carefully dropped the name bank, and now it's tech company, and they are I think listed now and worth more than the largest by assets Kazakh bank, twice more. So I think that's the reality, and I mean, you need to be very careful when you select when you do it, and timing is everything. So hopefully we'll hear about KMG IPO and or maybe strategic sale, etc., etc. But I suggest we move to the next question, and actually this question was typed in the chat, and I think the question was from Gulzhan Baribekova, and I think Gulzhan was generally interested in opportunities, what the speaker see as opportunities, and I guess the question was more about M&A opportunity type of opportunities. So I'll just give a floor and open the floor to all our speakers today, so because it's relevant. And I guess there are different types of opportunities for foreign investors, local investors, Chinese investors, oil majors, etc., etc. So please, I wonder maybe Anna can start because that was exactly her topic.
Thanks, Rashid. I think a simple answer to that question. We've all been eagerly awaiting an uplift in M&A activity in the Kazakh E&P sector. I think quite one of the issues, and as Ashley mentioned in his presentation, is that you have these super fields that have really taken a stage and front role in the Kazakh oil and gas sector. So the question is whether there will be some divestments by the existing partners, but then also whether there's new data and new acreage that will become available for smaller investments and developments, and whether it is an attractive investment regime for foreign investment and accessibility to market and opportunity to capitalize your investments. I mean, we certainly see a number of opportunities on the market, and I'm aware of various institutions looking to invest, but clearly that hasn't been implemented yet. So we're watching the space, very interested to see what the outcome of the licensing round would be, because I think that would be a good indicator as to the prospectivity and the health of the market going forward.
Thank you. Thank you. I wonder whether anyone else wants to join, maybe Yernur or Ashley, Natalia, please.
Yeah, I can perhaps add something on that. I mean, I think as has been said, opportunities, it really depends on the size of the company looking. And I'd probably list three things. I mean, firstly, I talked about the offshore fields that were relinquished last year, Kalam Kasmoya Khazar. That's 500 million barrels of discovered oil that, in other international companies are definitely going to take a look at. And, down the line, 2021 onwards, I'm sure Kazakhstan will seek to re-award. And there are, operators with offshore Caspian Sea experience who might think they can make that project work. That is a project of global scale, billions of dollars of investment, hundreds of millions of barrels of oil resources. We mentioned the onshore licensing auctions. I mean, we see that as most likely to be attractive to existing local operators. Previous auctions, they weren't online, generally didn't attract any big names. And most of the 10 blocks that are up for auction, first, the commitments only involve shallow wells. The big prize onshore Kazakhstan is deeper drilling, where there's higher risks and higher rewards. And then thirdly, on M&A, I think it's been the case for a while that there's probably more sellers than buyers in Kazakhstan. We're used to seeing kind of a steady flow of independent Chinese companies do deals in Kazakhstan, but that hasn't been the case now for a couple of years. So, those small-scale oil discoveries that could be monetized continue to stall. But as was mentioned in the presentations, the regulatory environment is there to make deals happen far more quickly than used to be the case, 5 or so years ago.
Thank you, Ashley. I think you picked up probably the most interesting, exciting opportunities, and some people joke in Kazakhstan, if Kazakh oil assets once been sold to Chinese investors, they never leave Chinese investors. They just sort of transferred from one Chinese company, maybe state-owned, to a private one, etc., but never come back to any other type of investors. So maybe that's true, but maybe it's a joke. So we'll see. And I quite agree with a number of opportunities with regards to projects which been kind of dropped, well, if I can use that word, by Shell in the Caspian offshore, but they are pretty good probably for some other investors. And as you said, I agree that next year, I'm sure next year we'll see new potential investors together with Kazakh Oil&Gas developing these assets, hopefully. Yernur, would you like to add anything on that? Or
I totally agree with the Ashley's comments, and I think I would probably add that the whole industry, oil and gas and oil and gas servicing industry, has been putting a big stake on the developments on the oil price of the COVID-19, global supply and demand of hydrocarbons overall to the next year. And most of the project has been postponed. Some of them were even canceled. And what we actually managed to observe that the interest, at least since the beginning of the pandemic, into the oil and gas industry has drastically fallen down, unfortunately. But we also hear various comments that the biggest stake and the bigger hope is made on the following year in 2021.
Thank you. Well, I guess
in terms of the opportunities, to add a bit more, let's say, positive remark, if I may, Rashid. I can't comment on M&As as I'm more from disposition perspective, but what I can say is that I think at these challenging times made a lot of companies think about the efficiency and effectiveness of running of the contracts. And what you might see from the opportunities perspective on dispute resolution side is actually some companies are considering whether to use this time or this COVID challenging times, effectively to revise their relationship or their contracts or future relationships with the counterparties, and see whether they can do it more efficiently or run it in the most efficient way. Sometimes, and unfortunately, might be a termination of the contract, but some might actually bring it on a slightly different level. They are thinking outside the box to make it work better. And I think if that's one of the opportunities, that would be the opportunity for dispute resolution.
Fantastic. I think that's definitely what we needed to hear, more positive news and suggestion that at least some people will be busy, and dispute resolution lawyers, I think they are well, they probably included. So I suggest we probably finalize our discussion here. I see quite a number of people probably need to leave or left already. If you don't mind, I would just want to thank again our co-organizers, KPMG and British-Kazakh Law Association. We also managed to do this event with kind help from our sister organization, British-Kazakh Society. And I was asked by British-Kazakh Society to point out that there will be another interesting event on Kazakhstan, mining event on the 22nd of October. And its main theme is encouraging mining investment in Kazakhstan. So I guess from oil and gas now, we can move on to mining next week if anyone is interested. So I'm sure details can be found at the website of British-Kazakh Society. And thank you again to all the speakers. I want to clap the hands, but probably it's not appropriate, but I'm impressed. I'm very grateful to all of you that you spared your time and spent time with us, and I think committed to this very interesting discussion. I suggest we probably revisit this topic, Kazakh oil and gas and challenges, maybe next year, and see what our sort of what was relevant in our discussion, what was not, and how Kazakh oil and gas is developing further. Thank you very much, everyone. Thank you.
Thank you very much, Rashid, and thank you very much for inviting and chairing this event, but also chairing British-Kazakh Law Association. And it's another event, a brilliant event that you have co-organized. So thank you very much for this.
Thank you.
Thank you.
Thank you.
Okay, take care, everyone. Bye. Bye.
Bye.